Hey everyone, welcome back to Corporate Dakota, the place where we sift through the suit's secrets and find the real story behind the numbers. Today we're diving into a filing from Faraday Future Intelligent Electric Incorporated. It looks like they've been busy reshuffling their corporate structure, and it's got us asking, what does this mean for the future of electric vehicles and the company itself? You won't want to miss this. And before we jump in, if you love getting these kinds of unfiltered corporate breakdowns, make sure you're subscribed to the channel. Also join our growing community on Discord. The link is in the description below. Alright, let's get right into it. This is a Form 8K filing, which is basically a report for significant events that shareholders should know about soon after they happen. Think of it as a company's urgent bulletin board. The key date here is the 18th of February 2026. That's when the significant events we're discussing today took place. We're talking about Faraday Future Intelligent Electric Incorporated, a name you might recognize in the sometimes rocky electric vehicle startup space. They are an incorporated company in Delaware, which is a common place for businesses to be legally set up. And this number, 001-39395, is their commission file number. It's like their official ID with the Securities and Exchange Commission, or SEC. Now let's look at how their securities are structured. They have class of common stock. The par value is incredibly small, just $0.0001 per S-share. This is largely a technicality and often means very little for everyday investors. The trading symbol for this stock is FII. You can find FFA trading on the Nasdaq Stock Market LLC. They also have redeemable warrants. These are essentially options to buy shares of the company's stock at a specific price. What's wild here is the exercise price, $110,400 per S-share. That's an extremely high price, suggesting these warrants are likely not in the money currently and were perhaps issued under very different circumstances or for future, highly optimistic price targets. The ticker for these warrants is FAI. These are also listed on the Nasdaq. Faraday Future Intelligent Electric Incorporated is checking the box to be considered an emerging growth company. This status offers some regulatory benefits, like being able to delay adopting new accounting standards, which can give them more time to prepare for complex financial reporting. The main event reported here under item 3.03 is about significant changes to the rights of their security holders. This is where things get interesting. On the 18th of February 2026, Faraday Future Intelligent Electric Incorporated filed an amendment to their core governing document, known as the Certificate of Incorporation. Think of this as their company's constitution. The big news is they increased the number of authorized shares of their common stock. They went from roughly 232 million authorized shares to over 312 million authorized shares. That's an increase of about 80 million shares. They also increased their authorized preferred stock, going from about 18 million shares to approximately 24 million shares. In total, the number of shares they are allowed to issue, both common and preferred, went from about 250 million to over 336 million. That's a substantial jump. This wasn't a unilateral decision. The stockholders, the owners of the company, approved these changes at a special meeting held earlier in February. This means the existing shareholders agreed to allow for more shares to be potentially issued in the future. Then they have this section, item 5.03, which essentially reiterates what we just discussed regarding amendments to their foundational corporate documents. But to raise an additional piece of information here, right before they filed the amendment to increase authorized shares, they also filed a certificate of elimination for their series of preferred stock. This means they are essentially removing a specific class of preferred stock from their charter. This elimination happened because all of their series of preferred stock had been automatically redeemed or bought back after the special meeting. Essentially, they are taking a specific type of preferred stock off the books, and any shares of that type will now revert to simply being authorized but unissued preferred stock, without a specific designation. This cleans up their corporate structure. Finally, under item 9.01, they list the exhibits that accompany this report. These are the actual legal documents that support the information provided. Exhibit 3.1 is the Certificate of Amendment itself, the document that increases the authorized shares, and Exhibit 3.2 is the Certificate of Elimination, detailing the removal of the series of preferred stock. Exhibit 104 is the cover page interactive data file, which is standard for these filings and makes the data machine readable for analysis. And the report is signed by Koti Meka, who holds the title of Chief Financial Officer, on the 20th of February 2026. Now, let's cut through the legalese and talk about what these changes actually mean for Faraday Future Intelligent Electric Incorporated. The sheer increase in authorized shares, both common and preferred, signals a potential need for capital infusion in the future. Companies authorize more shares when they anticipate needing to sell more stock to raise money, perhaps for ongoing operations, research and development, or to fund future growth. It is like a company saying, we might need to sell more of our ownership pie, so let's make sure we have enough slices available. Stockholders approving this means they're giving the company the green light to potentially dilute their existing ownership stake by issuing more shares. The elimination of the series of preferred stock is a housekeeping item. It likely streamlines their capital structure by removing a class of stock that is no longer relevant or outstanding. This can simplify future issuances and make their balance sheet appear cleaner. However, for Faraday Future, a company that has faced significant operational and financial challenges in the past, this move to increase authorized shares could be interpreted in a few ways. On one hand, it's a necessary step for flexibility in raising capital. On the other hand, it can also be seen as a sign that the company might struggle to generate sufficient cash flow internally and will likely need to tap the equity markets again. Given their history, investors will be watching very closely to see how these newly authorized shares are used. Are they being issued to a strategic partner, a new investor, or in a way that benefits long-term growth, or is it simply a means to survive the next few months? The extremely high exercise price on their warrants also suggests they are not currently a near-term threat to dilute existing shareholders in a significant way. However, if the company were to experience a huge surge in its stock price, these warrants could become exercisable and lead to significant dilution. Looking at the bigger picture, Faraday Future is operating in a hyper-competitive electric vehicle market. For them to succeed, they need not only innovative products, but also a stable financial footing. This move to authorize more shares provides that flexibility. But the real test will be how effectively they can deploy any capital raised and turn it into tangible growth and profitability without excessive shareholder dilution. The company's direction here is clearly focused on securing future financing options. The strengths lie in the potential for future capital access and a simplified stock structure. However, a significant weakness remains the historical financial instability and the constant need for external funding, which carries inherent risks. What is your take on Faraday Future's latest move? Does this signal a brighter future or just more equity dilution ahead? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button. It really helps us out, and if you haven't already, subscribe for more unfiltered corporate insights. Don't forget to check out our Discord community, linked in the description for more discussions. Thanks for watching Corporate Decoder. See you next time.